Hi, this is Randy Finney with Right Side of the Chart, and this is a late morning session update for Monday, December 23rd, 2019. Just want to start off by wishing everybody happy holidays. I'll be around this week, but I do want to make mention that it is an abbreviated trading week. We, of course, on Wednesday, December 25th, the markets are closed, and on Tuesday, Christmas Eve, it's an abbreviated trading session. Stock markets close at 1 p.m. Eastern Time. And if you haven't traded for a while, just keep in mind this week is a lot like the week of Thanksgiving. Because it is a holiday week, an abbreviated trading session, one of the days closed another day there, and on top of that, you have a lot of traders taking time off around the holidays. So what that tends to do is, you have lower volumes, which tends to opens the door for a higher rate of whipsaw signals. Whipsaw signals are false breakouts, breakdowns of chart patterns. Now, there are quite a few things I want to point out. That's why I want to do this update. And I want to say this: it doesn't guarantee any breakout's going to fail. Just keep that in mind, that there's a higher chance of that, and it's probably as good a time as any to take a few days off. Take a time away from your desk. But I'm going to go over the setups because you never know. Sometimes the market can move when people least expect it. All right, so what we'll do is go over the charts of the indexes real quick, do an update there, and then I want to hit on some of the things I've covered lately. Palladium, certainly want to do an update there. Crude oil, natural gas, Bitcoin, seeing we've got the breakout on Bitcoin, it's moving up nice, and gold. So those are the ones I want to hit in this video, and let's start out with the broad market. So IWM on small caps, I started this morning with an update with the RTY futures. I told you I'd follow up with some charts of the indexes. So there it is. You had a breakdown this morning. It shows a little better. Let's jump over to the futures real quick. This is what it looks like there, and I'm going to zoom in a little bit. So just like IWM, which we were just on, you have a lot of things in common here. You have the divergences on the 60-minute chart. So if I can grab that line, extend it out to the most recent high, there's your negative divergence. And so if you look closely here, you can see that the small caps broke down pretty much this morning, late last night, and it's December 23rd. It's 2 a.m. right here in the middle of the night. Came and back tested that trend line. I haven't modified it since last week. Back tested, then started moving lower, and there's that level I told you about, 1673, 1672. Once it took that out, you had an impulsive move down. So that was a breakdown, and at this point we're back testing. If it wasn't a holiday week, and especially if we had QQQ and SPY also trigger sell signals, I would say with a high degree of confidence this is an objective short entry. It is still an objective short entry. May certainly play out. Why? Because what you have a sell signal on the small caps. You have the breakdown here, although that wasn't impulsive, so that in itself, I wouldn't have gone short on. Then you hit this, you can see it's price support. That's why I had that line right there. Move back up, back tested, and then an impulsive rejection off the back test, plus we broke support. So that's a lot of check marks for IWM, but as I've been saying for the last week or so, although this is one of my, as far as the major stock indexes go, that is one of the better looking charts for setups for a short pullback trade. You've seen my targets; they've been listed. But then you have the large caps. The market's only going to go so far, especially the small caps, are only going to go so far to the downside if the large caps continue to rally. There are times, don't get me wrong, there are times where the small caps can fall or rise if the large caps are going the other way, but it certainly help. And with a very resilient trend that we're in, we've been in a strong, resilient uptrend recently in the broad markets, you want to give the benefit of the doubt. So again, it is an objective short right here as I'm doing that video on the small caps. And we may be going back test again. So it depends on whether you want to take this trade or not. I've laid out the targets, but I think if anything, probably maybe a fractional position, a starter position, or just let it go and wait till the large caps break down. So there's what you need to see on NQ, and I'll get back to QQQ and the index ETFs in just a second. But there's a minor trend line that I added right here. You can see that white trend line, and then we still have, this is the same trend line from last week, that yellow trend line there. So you can see same story, nothing has changed in the large caps. This is again NQ, the Nasdaq 100. We continue to to work our way higher. We're wedging higher. The divergences continue to extend, negative divergences, without any sell signals. So, a break of this minor trend line would likely spark a drop down to that trend line, and then from there we need to break that. And you can see, of course, the targets are laid out here. The only thing I've changed on this chart, other than that minor trend line I added, I do have an additional level here that's likely to come into play as support if and when we break down, and that's about 86.2550 on NQ. You can see right there is a little bit of sideways consolidation. That's the top of that range. And then this was a level last week. I said we need to break that when we were in that range, and that's 85.94, we'll call it. And then that should open the door to a larger drop if and when that happens, probably down at least to this level. But as of now, no sell signals, but we continue to diverge and wedge higher. Let's look at ES. Same story. I added a line there, support level about 320250, and that's also at the top of that recent consolidation zone. And so, just like in the charts last week, the two levels to watch that I still think are most important are this trend line here, the uptrend line, and the 3190-ish support level right there. So, break of that trend line would be an early, the first sell signal, let's say. Hit that, and we'll see what happens. Again, this can be a tricky week, but those are all the levels. And the way it works is if and as each one is taken out, it gives you a sell signal, and it opens the door to the next one down. And just eyeballing this wedge right now, let's just say at this point in time, that's all I'm looking for if we get that. And we may or may not. Like I said, the seasonality certainly favors the bulls right here, and the trend is up, and we don't have any sell signals. But if we get that sell signal, the break of the wedge, like I said, maybe a few percentage points on the downside, maybe more. Nothing has changed on the longer term charts, but we need to see some sell signals on the more important daily charts there. All right, so that's that. And again, RTY, like I said, objective short doesn't mean it's the highest probability short entry. It would look a lot better if and when the large caps break down. But that's like I said, the charts. When I look at this chart alone, it tells me that it's going to do this, and quite possibly that after a reaction on that 1659 level. Okay, back to IWM. So there it is on IWM. I can tighten that line up as I should right there a little bit. And you can see the wedge, breakdown, and back test. So that's also an objective short entry. Doesn't guarantee it'll play out. Don't mistake objective with high probability. Sometimes you can have both. I just spent a lot of time explaining why this may prove to be a whipsaw signal, because the large caps are still in an uptrend without sell signals because it's a holiday week, low volume, and that's pretty much it. And then SPY. Same story. Here's your 60-minute wedge. Let me zoom in a little bit there. Working our way up the wedge, we have divergence, continues to build without any sell signals. If and when we get a sell signal, meaning a break of the trend line, first support comes in right here about 319.50. There's a gap to be backfilled. If the market is going to continue up strong into year end and beyond, and the buyers step in aggressively as they have been, maybe you're looking at a backfill. A lot of gaps are backfilled sooner than later, and it'd actually be better for the bulls if that gap was backfilled and then we moved higher. That wouldn't leave any unfinished business right there. You can see this one right here was effectively backfilled, close to it right there, as were most of the other gaps in the past. And then you have QQQ. And there's your QQQ is well above trend right now on the 60-minute chart. So divergence, extreme overbought conditions, just like we were back here. You can see the last time we were this overbought above that purple line was right there at this divergent high. We hit that line a couple times there. Now we exceeded the line. So again, correction appears likely right now despite the uptrend, and again, will it be a relatively minor correction if and when it comes, or will it be more than that? So right now I probably need to add some lines to this 60-minute chart. There's that gap on QQQ. So let's just say at this point in time, the minimum and most likely targets, should we get these sell signals this week or next, would be a backfill of that gap right there, and there it is, about 207.50-ish on QQQ. Okay, now on to the good stuff where we can make money. Right now, maybe the potential there for some pullback trades on the markets, but let's talk the things that have been moving lately, moving a lot more than the stock market. First one would be Palladium. Palladium, remember you have, I'm focused on that 60-minute chart of PA, the Palladium futures, but the daily chart here, you have the negative divergences right there, bearish PPO crossover. You also have a resilient trend. It's been, like the stock market, being bought up on most corrections. However, Palladium, when it issues a pretty good sell signal, when you get like a clean trend line break like you had right here, negative divergence like you had back then, it tends to fall pretty hard, and ultimately those corrections were quite profitable to trade. And again, this one, you had a break of the trend line there. You've had some impulsive selling. From just the looks of that, it doesn't appear to be over, but then again, we had an impulsive drop there and it resumed up. And you also had actually divergence at that point as well. So I still favor more downside, but, and I've said this before, said it last week, it will certainly help if the market corrects, if those 60-minute charts, the divergences and then we get the trend line breaks and sell signals on the large cap stocks, NQ, ES, SPY, QQQ. Otherwise, because this has been a risk on and economic growth trade, I'm talking about Palladium here at the Palladium prices, it is quite possible if the market just powers through those divergences into year end and beyond, then Palladium, that may be it. It may be over for the correction right now. So let's look at the Palladium futures. That's where I'm really hyper focused. You can see a lot more of the trades going on there. It's at 1800. It's a big level, and last week we hit that level on the big drop. We hit it again. We overshot it this morning. Remember, when the futures open on Sunday night, there's hardly anybody around trading on Sunday night when futures open, and you had an opening imbalance that briefly took prices below there. But I often talk about looking for, when you're trading on any time frame, you want to see a candlestick close above or below a chart pattern or support or resistance. So you can see what happened when the futures opened last night. We dipped below there, but you can see that candle recovered back above that 1800 level. So we've had yet to break. Not a single candle has closed below 1800 so far on Palladium. We came back in again and tested it today, hair above, but for all intents and purposes, that's another successful test at that level. So you got to give it to Palladium. The Palladium bulls, or at least Palladium, it's holding up. But look, these indicators are in correction mode, and we're still under that, what did I point out today? The 38% Fibonacci retracement level. Let me give you the fibs again. Put up fibs. You take a Fibonacci tool, you put it at the highs right there, take your fib line down to the bottom, and I did that in reverse. Yes, I did. Let me clear that out and remove all Fibonacci lines. Some programs you go from the top to bottom. This one you have to go from the bottom to the top. Remove that trend line, and we'll try this one more time, guys. So we'll go from this, where this morning's lows were, up to the highs, and there it is. And so you can see this was what I pointed out this morning. That little kickback rally earlier today took us right up to the button to that 38.2%. That's one of the key Fibonacci retracement levels. And they're all, you can see all the levels here. 100% means you've retraced 100% of the correction. That's the top number there. And this is a typical counter trend rally. If you're going to have it's not a hard set thing. Sometimes I've seen rallies retrace 100% reverse, but typically anywhere from about the 38.2 up to about the 61.8% retracement. And so far, that's where we stopped. We're making another run at that level again. Obviously, if they break above there, there's also minor price resistance there. That could open the door to move up to the 50% level. And when I take the fibs away again, let's just look at price alone. And the big level to me is 1885. Palladium, should it run up that far? And I don't think that it will, based on how it's acted after previous, similar setups where you had clear negative divergence, overbought conditions, extreme bullishness, and then you start to get that choppy price action, very toppy, and the corrections start. Usually it's a pretty impulsive move down. So we'll see. And again, anything's possible. I just want to point out that's resistance. If we get up to 1885, that would certainly be an objective short level. with a stop somewhat below. I'm sorry, somewhat above it there, a little bit. You know, again, how you want to trade it, you can give it a little more room. You want to wait for a 60-minute candle close, or if it looks like you're about to get a 60-minute close, you could do that. Only downside is when you use the 60-minute candles on your stops, sometimes you can just keep powering on up. If 1885 is taken out, there's the next resistance at 1925.80, and pretty much anything beyond that probably just going to take us up to new highs in Palladium. But as of now, I favor more downside based on the charts, based on the indicators, and if we could get sell signals in the equity markets and SPY and QQQ, NQ, and ES, I would have a much higher degree of confidence on that. But as of now, that's still where I think we're going down here to that 1742.28 target. And this morning on the Palladium 60-minute chart, I gave you a comparable target. I had 163 there last week, but this is the one right here, 165.70, that aligns with that target I just told you on Palladium futures. So 165.71 would align there. It's getting up a little too much to be considered a bull flag or bear flag continuation pattern. It's a little too long, a little too much kickback so far. Doesn't mean we can't go lower, but I just want to say that if in case I get any questions there, no, I don't think we're flagging anymore. Too much upside so far. The flag wouldn't be symmetrical or I should say proportional to the flagpole right there. We'll just have to keep an eye and see if we take another leg down. And ideally, again, if you look at the futures, ideally you want to see Palladium. If you are short or shorted today or planning to short, let me go back to that chart. Like to see us stay below that previous reaction high we had right here earlier today. That one. Next up, Bitcoin. Bitcoin is certainly firming up here. This is a daily chart right here of Bitcoin futures, symbols BRR. You can see as I zoom in nice and tight. We had the breakout last week, which I mentioned, it was unimpulsive breakout and a back test, a lot like IWM, back testing today, except in reverse. You had a rising wedge instead of a falling wedge, but then a nice green candle today, some follow through to the upside. So price alone. Again, it's kind of a low volume trading week, so you take everything with a little grain of salt. But the charts are what they are, and some breakouts, like I said, just because you have low volume or impulsive moves doesn't mean they can't stick. So far so good. I just want to point out a breakout, a back test. Next target being again on the daily chart here, this downtrend line, and then 95.17. So that's up. Bitcoin futures are up 4.36% today. But I should point out, if you aren't in this one and you're considering going long, let me see if I can load this chart here. There it is. This is a 60-minute chart, and I have a pretty decent resistance level just above it, 77.87 right there, and we're coming up on that. So if you're not already long, you'd probably want to wait for a breakout, impulsive break above that level, because we're coming up that is likely to act as resistance. There's some gaps below and other levels to trade there. I could probably even play around with this trend line. Yeah, I could, and add that trend line. Let me do that right now to this chart. Let's just say, yeah, it comes in right about here, and so we broke out above there, but we have resistance just above. And let me give you another level here on the 60-minute chart. While I'm here, I can see right about here. What I'm looking at there, we had a sideways consolidation range back here, gapped above it, fell back down, and then once we broke below it, it was an impulsive move, and it acted as resistance down. That's that same level there. So if we can pop that 77.90ish level, I'd say Bitcoin looks good up here at about 8,600 or so. And then of course, if you don't trade futures, and that's a big contract too, the Bitcoin futures. They used to have one was it GBXT? Trying to remember, GBTC, GXBT. I'm forgetting it now. But that one I think was either CME. One of the exchanges retired that one, at least for the time being. They may bring it back, and that was a smaller contract. But you can also trade GBTC. Again, this is not, technically speaking, I don't think they categorize as an ETF. It's like a closed-end fund, and the difference is ETFs will always track right at whatever they're tracking. If it's an index or a commodity, they're going to price to that commodity on a day-by-day and ideally a minute-by-minute basis, whereas closed-end funds and funds like this can trade at a premium or discount. So that can be a good thing. During a rally, usually we'll start to get a premium built in. So in other words, what that means, what does a premium discount mean? So if Bitcoin rallies, let's say 20%, and it's selling at a discount at the time you take the breakout, let's say a 3 or 5% discount to the price of Bitcoin, it can rally. A lot of people are buying, and this ETF will work on supply and demand. So if you have more buyers and sellers, it can actually then go to a premium. So therefore, that 20% rise in Bitcoin could give you a 25% or so rally in GBTC if they close that discount, that 3 or 5% discount, whatever it is, and it moves to a, let's say, a 3 or 5% premium. So hopefully that makes sense to you. And that's it. So we broke out. We triggered there at 864. There was a breakout. That's the first target. It's been hit now. I need to post an update there. And the next target remains up at the downtrend line, which will probably be hit first at this, almost certainly now, because it comes in first. So that would be the next target there, the downtrend line. I had this level set just below 1046, was just below this line here at about 1053, that white line. But we'll probably hit that. What I could see happening, again, it will depend if we have a lot of upside momentum. If we start to pick up steam, I mean, it's pretty impulsive move so far. This one's up 4.34% today. But if we come into there with a lot of upside velocity, we'll probably overshoot the trend line, hit that resistance line around 1050 or so. And so that 1046 target's likely to be hit. And look for a reaction there, and then a breakout of those levels and a move up here to about 1183. So how you want to trade it, it's up to you. This is a target. You could take profits here. Just since that 864 level is taken out, that's already to today's high. That's about an 8.5% move. Or you can just set your stops, raise your stops at this point. I think that's prudent. And let it ride for now. The charts look good. Just broke out. Gold is at resistance, looking pretty good. It's been catching a pretty strong bid lately, despite the stock market going up. So, that's been a common theme for the last year or so. Whereas gold is typically a risk-off asset, but yet it's been rallying at times along with the stock market. Gold is in a bull market, and unless that changes, and we're in a correction, we have been for months now. But when I've covered this many times, you take a step back. Gold bottomed back in late 2015 and is clearly in an uptrend. So, and unless that the charts tell us otherwise, that's the trend right now in gold, and it's looking pretty good. And it might take the next leg up soon. So when I look at the 60-minute chart of GLD, I haven't cleaned this chart up. You see a lot of lines, but what stands out to me, we're at resistance. I'm going to show you that level on futures. It's a little more clear, but there it is. It's a resistance zone that runs up to about 140 right there, and it was this former support zone right there. We broke there. So if we can pop above it, I think gold could run, and it could run. I would say there's a lot of gaps and a lot of supply, we call this, this back and forth trading, so meaning resistance levels. But I think if it can pop there, make a solid pop above there and close above there, probably work our way back up here to, that's almost the 143 level, and quite possibly more. I mean, we've been consolidating for months. Let's see what happens in the next week or two. Let's see what happens with the equity markets. But there it is possible, and I'm still on lookout for a convincing break. This is not impulsive or convincing. I'm going to tighten that trend line up there a little bit. You can see what I'm doing, just adjusting my trend line ever so slightly. And we'll say right now we're testing the top of that triangle, the way I just adjusted them to come in real tight. I wanted to touch the top of that candle exactly, come in real close to that candle, and that's where we're at. So this is the top yellow line, the downtrend line, and this line here. Let me color code these. Let's do it another way. Let's make them blue so it stands out. These two lines form a symmetrical triangle pattern right there. There it is, the blue line. So that's it. So if gold can pop that, it could be the catalyst for a breakout and the next leg up even. And then we look at gold futures. I've been highlighting that lately. 1488. Looks, you can see a nice clean resistance level right there. And let's color code it here, 1488. You can see it was support on this sideways trading range here. We broke support, pulse have moved down. We've tested it several times since, and we're working our way up. This is almost takes the shape of an ascending triangle pattern there, and there's a minor trend line. Let me add this to my charts as well. So let's watch that one. And break of that one would likely throw us back down here to this trend line again, or it could open the door for a drop there. And this is the bottom of the range. So watch either of those trend lines. Bullish if we could stay above them. We're in this range now between 1458 and 1488. Upside break, especially impulsive, should open the door to take us up back to the top of that range again. That'd be a pretty nice move in gold. Otherwise, downside break of that, you have opens the door for this next trend line to be hit again. And if that breaks, then you have the bottom of the range. And if that breaks, it's not very good. Natural gas, looked like it was trying to get going here. We had the breakout, the back test of the trend line, and look at what we do. We just continue to come on and back test this thing again. We're just inching lower here. Another back test, not bullish action. We're almost to, we haven't taken out that previous reaction low, but we have some minor support right about here where the crosshairs are. Look, if you're in it, if you given a little room, fine. Would I take it here? No. I still want to see it take out this level right here, 2.377. That level was hit right there, and we need to take that out to open the door for any upside move. Anything much lower, we're going to hit it, take out a new low. There certainly has the potential to be some positive divergence, but that's just not great. We're kind of consolidating here. That right now, look, I don't have a very strong opinion. I liked it before here on the back test. It's a failure to launch so far. It keeps trying to go up, and it's kind of chopping around here. So let's keep it simple. Break above 2377. Should be bullish, should open the door for more upside. Of course, a break of the downtrend line, the 2.460 level, would also open the door for more downside, whereas if we go much lower, we could take another leg down there. I'm still leaning this way, but we'll see what happens. Natural gas needs to do some work. It's starting to get choppy and sloppy right here, so not giving us a lot of clues to the direction now. And if I didn't own a position, I still have a small position. I give it a little more room. I wouldn't add to it, or I wouldn't take it if I didn't own it here, and I'm certainly not adding to that position right now. And finally, crude oil, the breakdown last week I mentioned of the trend line right there. It's kind of holding up here so far today, and let's add a line there since it seems to be holding around $60. Yeah, there's the magic $60 number. Break of 60 would bring us down here to 58.69, and quite possibly this uptrend line right here. Anything less than that, if it can power back up and take back the trend line, or it could even move up and back test the trend line. Right now, based on the divergences we had at the recent high, let me give you the divergence line. They're not on here. There's your divergence line. You can see the negative divergence right here into the highs, and extend that line. Based on that, I would expect more downside in crude. I do think these levels will be hit, but of course you have to have 60 break with conviction to open the door to the move down there. And on a related note, I said that would be it. Let's just look at XLE. XLE, the main energy sector ETF, is still at that 6145-ish resistance. Charts still look constructive. Still one of the better looking sectors, in my opinion, in the S&P 500. Where it goes from here will most likely depend on what crude does. Can crude shrug off those divergences? Is that it for the correction? If so, maybe this week or next, or into the end of the year, we rally, and next target would be up here between these two lines. I need to give you those levels, don't I? It's about 63.75 right there, and 64.50 or so. So that would be the next target zone. But again, if crude rolls down and let's say crude goes into hit that lower trend line on crude futures. Let me go back to that chart real quick. All the way back down here. If we do this, let me grab my arrow tool. Breakdown. If that scenario plays out, and I put decent odds that it could. Very decent odds, because like I said, the indexes are poised to break down, just haven't given us those sell signals yet. So I'm going to tell you I'm leaning towards this, and what that will do, or will most likely do, is take XLE and you may get a back test. At that point, I may add XLE and some of those energy ETFs as an official trades if we hit this level right here, the back test of that trend line. And I like what I see at the time. What does that mean? I like what I see. For example, let's say at the time that's hit, crude hits that uptrend line, and that's similar to this uptrend line right here. So if crude oil pulls back to that trend line support, XLE would have dual support levels. You'd have the downtrend line right there, back tested, and you'd have this uptrend line, little triangle pattern, and that would provide an objective entry. We may not get that. Who knows? Crude may power on through here, but if we do, that's where we may have an objective buying up on crude, and that could happen in the next couple weeks here. XOP, it broke out. Kind of slowing down a little bit recently, and maybe it would come in and back test as well. If not, you can see the additional targets there. And XES, same story. Breakout's been pretty strong, nice advance recently, but coming up to a resistance zone right there about 815 to 832, and a pullback on XES could take it back here to at least that 750 level. Possibly a back test of the trend line, although that would come in quite a bit lower. It'd be XES is going to move more. It's more volatile. They have the smaller companies in there, and the oil and gas equipment services. They tend to move a lot more. Some of these guys can go up and down double digits in a single day. Actually, quite a few of those companies can. Whereas you don't usually see that with the components of XLE. XLE, that's your big oil, integrated oil, Chevron, Texaco, Exxon Mobil, BP, those kind of companies. And by the way, there's a lot of other companies in there, a lot of other holdings, but this one, unlike the others, it's not very diversified. You need to know what you're trading when you trade ETFs. In fact, Exxon Mobil is the top component. It's as of now, I'm going off Spider's website, 21.82, so that's 22%. Nearly 1/4 of XLE's returns come from this one stock. The second largest weighting is Chevron, and that represents 20.65, so there's 21%. So the two combined, you're talking almost 43%. Nearly half of this ETF, the returns will come from just these two stocks alone. So really, if you're trading XLE, you're basically have a concentrated portfolio of Exxon Mobil and Chevron. I just want to let you know. And there's a lot of other companies in there, but you go down the line. The third largest holding, ConocoPhillips, is 4.93, and then it drops quickly. So you get down to the 10th largest holding, Occidental Petroleum, OXY, and that's only a 3.29%. So see, OXY could rip or dip in a day, and it's not going to hardly move the needle on XLE. I just wanted to kind of point that out to you guys, that so you really want to watch these two. And these charts, just they're not as clear to me as some of those little stocks like in XES and XOP. I told you those are the two that I prefer, but this is the bigger picture on Chevron, and then Exxon Mobil, kind of similar story there. You really have a downtrend line right there that needs to be taken out, and I'm going to put that right there, that high there. So that's the bigger picture on this one. So if you want to know where XLE is going, you're going to have to watch and see how these guys break. All right, we'll wrap it up here. If there's anything else that comes across my radar today, I'll get it out to you guys. But again, happy holidays to everybody, and good luck trading. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.